Okay, so we move further. We completed question number 7. So the concept of this question was nothing but deferred tax are to be measured using the tax rates applicable in the year in which those timing or temporary difference would reverse off. Yes. Question number 3 is a comprehensive. Krishna Limited started business on 1st April 2017. The following details are available from the books of accounts and other records of Krishna Limited. Profit before depreciation tax. Before I go with all these things, let me give you an idea with respect to what we were talking. Yeah. So the objective definitions, what is the tax base of an asset, tax base of a liability we completed, what is the impact of temporary difference, deferred tax asset and deferred tax liability we learned. Then we also completed measurement part. So this was the broader idea with respect to what we are going to learn today, in which we have already completed point number 6. Yeah, I move on to another question. What is this? Krishna Limited started business on 1st April. Following details are available from the books of accounts and other records of Krishna Limited. Profit before depreciation and tax 15, 18, 25 and 30. The company purchased following machines: on 1/4/17 4 lakh, on 1/4/18 3 lakhs, on 1/4/2020 4 lakhs. The company charges depreciation on machines at 15% per annum by WDV method, whereas the rates of depreciation for tax purposes is 25%. The company has no other fixed asset. Tax rates for 5 relevant years are 50, 45, 40, 35, 35 respectively. You are required to prepare a profit and loss statement showing the provision for tax as per IND AS, it is not IND AS, IND AS 12. Now basically it is same only. What is happening is number of assets have increased which I am procuring. So what I need to do is I need to find out carrying amount of all those assets at every point of time. So if solution is concerned, statement of profit and loss. Profit is 15, 18, 25, 30. Profit before depreciation 15, 18, 25. Yeah, this is nothing but profit before depreciation. From that, we have to deduct the depreciation. So what we get is nothing but profit before tax. From that, current tax and of course deferred tax. After adjusting for current tax and deferred tax, what you will get is nothing but so now how much depreciation? So I'll just make a table there. Calculation of depreciation and WDV. I'll do it for accounts, for tax, both of them simultaneously. Now, what has happened? You purchased on 1,417 4 lakhs. So, original cost 1,417 4 lakhs. I am making an account only basically for our fixed asset. Then any purchases, nothing has been purchased. Yeah, it's on 1,418 less depreciation. Now, this depreciation is 15% WDV, 15% WDV. So, 60,000. So, my WDV is on 31st March 2018, 3,40,000. Then again there is purchases during 18-19. Yeah, 18-19 there is a purchase of 3 lakhs. So, what you have to now with you is 6,40,000 . Depreciation for 18-19, 640 ka 15%, 96,000. Five lakh 44,000. 1,420 you are buying. So, simple, less depreciation for 19-20, 81,000. I hope everybody is getting it. We are charging depreciation at the rate of 15%. Four lakh 62,400. I'll just carry here. Purchases for 2020-21. You are purchasing something for 2020-21. 4 lakhs. So, the balance is 8,62,400 less depreciation for 2020-21, 1,29,360. Yeah, this is 15%. So, WDV is on 31st March 2021. Till this only we have to do it. Okay, so you have depreciation for all these years as per books of accounts. This is your amount of depreciation: 60, 96, 81, 600 and 129,360. So, 60,000, 96,000, 81,600 and 129,360. This is the amount of depreciation. 14,40,000. Yes, all of you? 1440. 17,04,000. 28 lakh. Huh. $28 70 na 640. Clear all of you? Now we have to find out current tax. What will be the current tax? For current tax, can I say we need to first find out what is the depreciation as per tax? Yeah. So 4 lakh, they are going to charge depreciation at the rate of 25% WDV. Look here. Huh? So 25% WDV, no mention is there, it is WDV method only. 1 lakh. So we have 3 lakhs. Then again you purchase 3 lakhs. So we have 6 lakhs. Then 1,50,000 will be the depreciation for this year. Four lakh 50. 1 lakh. Yes, madam. Then we have purchased again 4 lakhs, so 7 lakh 37,500. 25% of 737,500. 5 lakh. 120. Clear? Now, calculation of current taxes. Year 1, year 2, year 3 and year 4. Profit before tax 1440, 17,4, 2418 and this amounts. Yeah. Profit before tax. How much? 14 lakh 40,000. Thereafter 17 lakh 4,000. Thereafter, of course, as per accounts. As per accounts. Yes, madam. 24 lakh. And the last?
28,70,640.
Yeah, thank you. Now in this, I will disallow the depreciation what they have a charge as depreciation as per books, but I will allow them depreciation as per tax. As far as depreciation as per books is concerned, here 60, 96, 81, 600, 60, 96, 81, 600. From here I am bringing the data and 129, 360. This is what we are doing. Yeah. Then after, what is the depreciation as per tax? Now 1 lakh 150. 1 lakh 150 Then what we had? 112,500 and 1 lakh. Can I say 14 lakhs? 16 lakh? 50, 45, 40, 35. 20. 50. Tax rate. What are the tax rates? 50, 45, 40, 35. And 35. And of course, they have also given it for the year 5, which is 35%. So, here my tax will be 7 lakh. 7 lakh. 9 lakh 50. Exact. Are you verifying now? 955. 460. Okay. So, we will just write down the amount of current taxes in our statement of P&L. 7 lakh. Then 9 lakh and pardon? Yeah, these are the amounts which we have found out here. Over. Now what we have to do? Find out deferred taxes. So how to find out deferred taxes? Calculation of deferred taxes. Year 1, year 2, year 3, year 4. Of course, year 5 they have just given us the tax rate. We'll make an assumption here. What assumption? That we know the tax rate of the next year. Question has not given us any point, but we will make an assumption that we know the tax rate of another year. Okay, so carrying amount of fixed asset. Tax base of fixed asset. Carrying amount of fixed asset, you can find out this from the table. Can I say the carrying amount of fixed asset is 340 and 3 lakhs is the tax base. At the end of the year 1, getting it? 340 and 3 lakhs. Then what? 5 lakh 50? 5 lakh 44,000 and 4 lakh 50,000. 8
60 to 400. 737 500. 733 040. 553 125.
This amounts have been brought. These amounts have been brought from our table, which is this wala. Nothing but we are finding out the WDV. This 544, 462. These are the 4. Year 1, year 2, year 3. I'm sorry. Year 1 it is 340, na? Year 2, 544 and 450. This year 3, 462, 400, 337, 500. Huh?
I made a mistake.
Acha, so the amount which you have given is different? Yeah. Kindly rectify, this is an error. Year 3, yes, what is year 3? 462, 400 and 337, 500. 462, 400. And 337, 500. Year 4, 733,040 and I think that was correct. Yes, sir. Sure? Okay, should I proceed now? We have temporary difference. Taxable or deductible? Taxable ke deductible? When the carrying amount of the asset is more than the tax base of that asset, then we get taxable timing differences. Timing in the sense, I'm sorry, I'm using the word timing, it's temporary differences. 40,000,
94,000.
94,000,
1,24,900. 1,79,915.
1 lakh.
79,915.
Just wait. Is this correct? No, it's not working.
Slow में अलग है.
नहीं मेरे को नहीं चाहिए. हाँ. Okay. So tax rates. Help me out. Tax rates. What are the tax rates?
45.
50, 45, 50%, 45%, 40%, 35% and 35% लिखना जरूरी है. इला दिला and 35%. बराबर है. So this will give rise to DTL. What should be the balance of DTL? 40,000 into 50%, sorry, 45%. I hope you are understanding. याद आ रहा है? नेक्स्ट ईयर का रेट्स लेने का.
No, not that. That's 18,000.
This is
18,000.
it's
18,000.
18,000.
37,600.
94,000 into 40%. I want this balance in my DTL account. How much, madam?
37,600.
124,900 into 35%.
49,960.
And 179,915 into 35%. कौन सा 35? ये वाला कि ये वाला?
62,970.
62,000.
970.
Now this is the balance in DTL. I want this balance. So can I say DTL will be created? The amount of DTL created in the first year is 18,000. If I create 18,000 तो ये 18,000 का बैलेंस आएगा ना? किधर 43? 124,900 into 35%. गलत लिखा? चल 43. Please check. 7. I'm totally dependent on you for calculations. 43,715. अभी balance है 18,000. I need balance to be 37,600. What should I do? Create DTL. How much? 37,600 minus 18,000. 19,000. So in all these years DTL is getting created only. There is no reversal which is happening. $43,715 minus 37,600. Pardon?
6,115. 19,255.
Should I go to the next part? This was nothing but calculation of current taxes. And this was nothing but the WDV of the asset. And this is the main part. Chalo. Tell me what is the amount of deferred tax, asset or liability? Liability. So DTL is created. Can you help me with the amount first year? 7. These amounts are brought from that last working note, huh? 41.
14 lakh 57 285. 18 lakh 65 916.
Wrong, eh?
First year का 7 lakh 22,000.
पहले साल का ही
हाँ.
तो all years are wrong or
नहीं नहीं बाकी
7 lakh
22,000.
फिर 941 740 1457 285 and thereafter
18 lakh 65,916.
others verify, huh? 18
65 916.
I hope all of you got the answer. Now, based on this, you can complete off question number 5. Homework. Just read this question. It's just similar to that question what we did. Rama Limited is a listed company, started business on 1st April 2017. The following details are available from books of accounts and other records. 17, 18, 18, 19, 19, 20 and 2021. Company purchased following machines 17, 18 and 19. 17, 18 and 20. Company charges depreciation 15%, whereas the tax rate for depreciation for tax purpose is 25. Company has no other fixed asset tax rates for 5. Can I say similar to what we did now? Question number 4 only. Some amounts have only changed. You can try it as an homework and just check out the answers. Yeah, we now proceed. We did many questions. Now let's do some theory part again, and then again jump to the questions which are remaining. We were on measurement of tax expense. I'll just give you a brief idea with respect to अभी तक क्या सीख लिया. सबसे पहले we had an introduction. Why this standard? Of course, this standard was acting as a bridge for understanding what future is all about, whether I have tax payable or I have tax recoverable. Scope we studied, definitions. After definition, what is the tax base of an asset, what is the tax base of a liability, this is what we studied. Thereafter, we studied what is the impact of these temporary differences. These temporary differences can be taxable temporary differences or deductible temporary differences. If they are taxable temporary differences, it means tax will be payable, DTL is to be created. If they are deductible temporary differences, then tax will be recoverable, DTA is to be created. How to identify whether it is deductible or taxable temporary difference? We say you have to compare. I have to compare whom? I have to compare the carrying amount of the asset with the tax base of the asset, or the carrying amount of the liability with the tax base of the liability. If carrying amount of asset is more than the tax base, it is nothing but taxable temporary differences. But if the carrying amount is less than the tax base, we said is deductible temporary difference, create DTA. As far as liability was concerned, if the carrying amount of liability is more than the tax base, create DTA, it is deductible, ulta, it is deductible temporary difference. Repeat again, if the carrying amount of liability is more than the tax base, it is ulta, deductible differences, so create DTA, and vice versa. If the carrying amount of the liability is less than the tax base of the liability, what should we do? Can I say we should create deferred tax liability. It is nothing but taxable temporary differences. Once we did this, we studied impact, we did some 2-3 examples. Thereafter, we went for another stuff, that was measurement. How to measure this tax expense? What was tax expense? Current tax plus deferred tax was your tax expense. How to measure current tax? We studied current tax is to be measured in this manner, that is nothing but at tax rate. What are applicable for that year? Deferred tax is to be measured. Deferred tax is to be measured using substantively enacted rates. The rate at which those difference will, the year in which those difference will reverse off, at that rates, substantively enacted rates. Yeah. So, and then we did some problems on this. I'll just move to the some last area of this. New area. Till now we were talking about difference between the carrying amount of the asset, yeah, carrying amount of the asset and the tax base. If I make this statement, it looks somewhat of weird, but it is reality. When I earn profit, I pay tax to the government, but when I make loss, government pays tax to me. Sir, government doesn't give money. Yes, it gives. If you make loss, government allows us to carry forward it for some period. It allows this loss to be carried forward. When it allows this loss to be carried forward, what happens? That loss is allowed to be carried forward. Means in the subsequent years, 8 years, 8 years hai na? In the subsequent year, if I make profits, that loss will write off my profits and I pay less tax. Means if you look properly, what happened? When you made profit, government charged you tax. When you make loss, they don't actually give you tax, but they help you or they reduce your tax liability in future. Like इस साल मैंने 1 लाख का loss किया. In the next year I make profit of 3 lakhs. They don't charge me tax on 3 lakhs. They charge me tax on 2 lakhs. Means can I say that indirectly 1 लाख के income के ऊपर tax ही नहीं लगा मेरे को? Because in the last year They allowed that loss, carry forward of loss. That is nothing but unused tax losses. Say way, unused tax credit. Now what is unused tax credit? Unabsorbed depreciation. You have unabsorbed depreciation. Do you remember what is unabsorbed depreciation? The amount of depreciation is more as compared to the amount of profit available. So the amount which is in excess is referred as unabsorbed depreciation, and that is allowed to be carried forward for subsequent year. That is nothing but unused tax credit. Now what happens because of this? Can I say as a result of this, my future tax amount, tax payable reduces? Because of unused tax losses, my future tax payable reduces. So this standard says, why not recognize a DTA for unused tax losses? मैंने इस साल 1 लाख का लॉस किया है. I made a loss of 1 lakh in this year. This loss will be set off against profit. So it is going to reduce my total tax liability in future. Future I will earn a profit of 3 lakhs, but I don't have to pay tax on 3 lakhs. I have to pay tax only on 2 lakhs. तो ये जो 1 लाख पे टैक्स नहीं भरना है, don't you think that much of tax recoverable is there, or an asset is getting created? Now this asset is getting created because of future, nahi, because of today. Today I have made a loss. I have made a loss today, and because I have made a loss today, I am going to get benefit in future. So this standard says, I will create deferred tax asset. I will create deferred tax asset. So for unused tax losses and unused tax credit, if you would have gone somewhere around AS 22, there was a concept referred as evidence was required. Virtual certainty as supported by convincing evidence, yeah, and reasonable certainty. These two things have been withdrawn. IND AS 12 does not have this concept. It says that it should be probable that there will be future taxable profit. Like I have made a loss in this year, and sir, my company is in the process of filing for liquidation only. Then don't create deferred tax asset. ये साल लॉस हो गया और ऐसा हालत हो गया है कि अभी फ्यूचर एक क्वेश्चन मार्क है, गोइंग कंसर्न ही नहीं है. मैं इज अ क्वेश्चन मार्क. I have filed for bankruptcy. If I have filed for bankruptcy, then what? Then in that case, don't you think the probability to earn future taxable income is less? Means less क्या है ही नहीं. Then don't create deferred tax asset. Standard says create deferred tax asset to the extent it is probable. Probable. You remember probable, yesterday also we spoke. More likely than not. It is probable that taxable profit will be there in future, against which this deferred tax asset which we have created will get reversed off. Yeah. So recognize deferred tax asset in such circumstances, means circumstances of tax credit or unused tax losses. Recognize deferred tax asset in such circumstances only to the extent it is probable that future taxable profit, see, taxable profit, if you remember the definition, accounting profit, taxable profit, will be available against which in future there will be sufficient taxable profit against which this tax credit or this tax loss can be reversed off or it can be used against it. इस साल 1 लाख का लॉस हुआ सर, नेक्स्ट ईयर प्रॉफिट होने वाला है, बट इसके लिए कोई कन्विंसिंग एविडेंस नहीं चाहिए, वर्चुअल सर्टेनिटी नहीं चाहिए. What I require is nothing but a probability. It is probable that future taxable profit will be. Probability, how does it come? Normal functioning is happening, good tax order, good book is there, tax planning is done. This is probability. Yeah, probable that future taxable profit will be available. I'll do one question on this. Have you written this? लिखा नहीं है? Question number 4. A company prepares its accounts annually. On 31st March, the company has incurred a loss of 1 lakh in the year 2017 and has made a profit of 50,000 and 60,000 in the year 18-19 respectively. It is assumed that under the tax laws, loss can be carried forward for 8 years and the tax rate is 40% at the end of year 2017. It was virtually certain, supported by convincing evidence, that the company would have sufficient taxable income in future years against which unabsorbed depreciation and carry forward of loss can be set off. Now this line, this statement was required when it was AS 22. It was virtually certain, supported by convincing evidence, that the company would have sufficient taxable income in future years against which unabsorbed depreciation and carry forward of loss can be set off. अगर इतना बड़ा स्टेटमेंट नहीं भी दिया रहता है, it only says it is probable that future taxable profit will be there. बस खत्म. You don't require. It is also assumed that there are no differences between taxable income and accounting income except for set off of loss allowed in 2019 for tax purposes. Just have a reading of that question will make the solution for this. Now that is 2017, 2018 and 19, year 1, year 2, year 3. What is net profit before tax under accounts? Can I say company incurred a loss of 1 lakh, 50,000 profit, 60,000 profit. 1 lakh is a loss, 50,000 is the profit, 60,000 is the profit. Current tax, here I can say dash. What will be the depth for tax? Let's work out. Yeah? Now, calculation of current tax. I'll just write it down. Do you agree? First year में 1 lakh loss is there, so obviously no taxable profit. But वो 1 lakh carry forward होएगा तो second year में I will get a benefit of 50,000. Third year also I will get benefit of 50. So total 1 lakh is there. So current tax, what is the tax at the rate of, tax rate 40%. $4,000. So here dash 4,000. Should I proceed? See, this looks somewhat of weird, but only for understanding. If my P&L account has a debit balance, generally I show it on the asset side or not? If a P&L account has a debit balance means loss, I show it on the asset side. So what I would say, that is nothing but my tax base. The amount that gets carried forward is nothing but the tax base. So year 1, year 2 and year 3. Balance in P&L carried forward as per accounts. Of course, a debit balance 0, 0, 0 means we don't carry forward. If there is any debit balance in accounts, what happens? That debit balance in accounts is cancelled off against reserves and surplus. So that debit balance is not there. Only for understanding purpose I am doing. Debit balance in P&L carried forward as per tax. This is nothing but an asset. For me it is an asset. Fictitious asset used to speak something in 11, 12. I am just saying that P&L account is my fictitious asset. Only for making this problem easier, this is not the actual. वो कोई asset बसेट होता नहीं है P&L का balance. Can I say it is 1 lakh here? Here it is 50,000. कैसे मालूम पड़ा 50,000 है? See, year 1 के end में I made a loss of 1 lakh. So that 1 lakh will be carried forward in the year 2. In year 2 what happened? This 50,000 is knocked off. So in year 2 if I knock off 50,000, so 50,000 रह गया, and year 3 it is again 0. Now this is nothing but temporary difference. Tell me, this temporary difference deductible or taxable? Is it deductible or taxable? Who is more than whom? Can I say tax base is more than? This is nothing but P&L as per tax. So tax base is 1 lakh, accounting base is 0. So what comes? If the balance of that asset, carrying amount of the asset is more than the tax base of the asset, we add taxable temporary differences. But if the carrying amount of the asset is less than the tax base of the asset, we have deductible temporary difference. Are you getting it? Yeah? Therefore, DTA आएगा and this will be the balance of DTA. 40% मतलब 40,000, 20,000 and 0. I want a balance of 40,000. So in year 1, I will pass an entry DTA account debit to profit and loss 40,000. Year 2, I want balance to be 20. Profit and loss account debit to DTA. Year 3, I want the balance to be 0, please. The balance is 0. We proceed? Chalo. How much DTA आया? I think 40,000. Reverse हुआ 20,000. I'm sorry, not negative. This deferred tax balance I have brought from where? That working note what we did now. ये रहा working note. ये देखो. See, I have just assumed that way, that profit and loss balance is a tax base. It is nothing but an asset. Fictitious. Let it be fictitious, but it's a tax base. So, 60,000 negative profit after tax. So, what will be the amount here? Sorry, I made an error. It is already negative. So, can I say 30,000? Just wait. My profit and loss account is 50,000 negative. I'll just remove that negativity. समझने के लिए ये लॉस है मेरा कि प्रॉफिट था 50,000 आई डोंट इट वाज प्रॉफिट ना हाँ सो आई मेड एन एरर आई एम सॉरी ये नेगेटिव नहीं था पॉजिटिव था काइंडली रेक्टिफाई मेड एन एरर देयर हाँ So 50 minus 20, 30,000 positive, 60 minus 24. Here. Got it, all of you? Yeah? So, basically we completed this part also. 1 is done, 2 is done, 3 is done, 4 is done, 5 is homework. Okay, so we have to understand 6. 7 is also done. Now we have to just complete this part. Sixth concept we have to learn, and then we can just complete it off. Yeah, question number 8. Let's do that and then complete of the conceptual part. Omega Limited is working on different projects. Those are likely to be completed in 3 years period. It recognizes revenue from this contract on percentage of completion method for financial years 17, 18, 19, 11 lakhs, 16 lakhs, 21 lakhs. However, for income tax purpose, it has adopted completed contract method under which recognize revenue of 7 lakh, 18 lakhs and 23 lakhs for these years 17, 18 and 19 respectively. Income tax rate is 35%. Compute the amount of deferred tax asset or deferred tax liability. So the profit, they have given the profit, they have not given us that base, asset base. We can create asset base. Because when you have recognized revenue, something would have been debited, na? Asset is debited or not? Contract T. Something which is receivable. The contractee account has been debited by 11 lakhs, thereafter 16 lakhs and 21 lakhs. So I can just, you want to solve this पूरा sum solve करते हैं? अच्छा पढ़ लो, पहले पढ़ लो एक दफा. Just get an idea. Okay, see, now what has happened? Profit as per accounts is 11, 16 and 21. Do you agree? 11 lakhs, 16 lakhs and 21 lakhs. Now see, this is the profit. It means the entry which I would have passed for my contract. Can I say entry would have been income is getting credited. So something would have been debited. The contractor will debit an account. The person who takes the contract, contractor, the person who has given the contract, who gave me a work, ke sir building bana ke do. I say okay, bana ke deta hai. Now as in work goes, I am not relating it with AS7 and all those things. In a basic way, can I say you become my debtor? You will become my debtor or not? You become my debtor. I will say debtor account debit to revenue. So I have recognized revenue of 11 lakhs, 16 lakhs and 21 lakhs based on some proportionate completion method. Now this has gone, AS7 has gone, even AS9, even IND AS 18 and all those things. The reason we have IND AS 115. Now what will be the current tax? So for that you will say, of course, deferred tax. उधर ही सीधा दे दिया वो लोग ने टैक्सेबल प्रॉफिट 7, 18 and 23. Tax at the rate of 35%. Yes, help me out. 35% of 7 lakh. 2 lakh. 5 lakh. 7 lakh. Chalo. Now see. Year 1, year 2, year 3. I am just thinking this way that सामने contractor है तो carrying amount of asset as per books, can I say 11 lakh plus 16, 11 plus 16, 27 lakhs because it is cumulative. वो income है बेटा, that is income, don't say वो 16 अलग से लिखेगा, plus 21, kindly help me out, 21, that is 38 lakhs. Huh? 27 plus 21 na? So 48, I'm sorry. Now, tax base. In tax, what did you consider? Can I say 7 lakh? I credited the income, I debited some asset. So the tax base is 7 lakh. Plus 18, 20 and plus 23. Clear? Temporary difference. Which temporary differences? Taxable ke deductible? Madam, taxable. Why? Carrying amount of asset is more than the tax base. So we get temporary taxable difference. 5 lakhs. Oh, I'm sorry. 7 and 4. It's 4 lakhs. 4 lakhs. 2 lakhs. Sunya. So DTL balance. What is the tax rate? 35%. So what balance I want? 4 lakh ka 35%. 2 lakh ka 35% or 0 ka 35%, something like that. It is 0 only. Help me out. 1,40,000. 70,000 reverse. Means I want a balance of 70. ये balance है, this is not deferred tax liability created. Remember, this is not deferred tax liability. ये मेरा balance है कि इतना deferred tax liability में balance मांगता. First year पे 140 मांगता, second year पे 70 मांगता, third year का end पे I want the balance to be 0. So can I say year 1? Yeah, you're copying. Please copy. Yes? Now, what will be your entry in year 1 for deferred taxes? Profit and loss account debit to deferred tax liability. How much? 1,40,000. What will be your journal entry in year 2? Can I say I want a balance of 70,000? मेरे पास balance है 140 तो reverse मारना पड़ेगा. Deferred tax liability account debit to P&L. How much? 70,000. Same way in year 3. Here, this we can write it down here. I'm sorry. 7 lakh? 7 lakh का 35%. 11 lakh का नहीं बेटा. ये 245 जो है ना, वो मैं 11 लाख के ऊपर नहीं पे कर रहा हूं. नीचे देखिए 7 लाख के ऊपर आता है. करंट टैक्स इज बेस्ड ऑन टैक्सेबल प्रॉफिट. यस प्लीज गिव.
7 lakh 15,000. 11 lakh 10,000. 14 lakh 35,000.
Okay, sir, any doubts? हाँ 18 lakhs का 35%, 560. Okay, hey, this is wrong. This is how much? Pardon, 6 lakh?
30,000.
Okay, I'll give you another way to check out your answers. See. ऊपर 16 lakhs है ना, उसका 75% करो, नीचे सेम रहना चाहिए. That is nothing but that matching will happen. This has to be 65%. I'm sorry. 11 lakh का 65% करो. You get that answer, then it is correct. I'll do it all calculator. चलो. $7,15,000 बरोबर है. 16 lakhs का 65%. 1040 आ रहा है. हाँ तो परफेक्ट. 1040. थर्ड ईयर में क्या लोचा है? अच्छा ये 735 नहीं है. प्लीज काइंडली रेक्टिफाई द एरर. 80. So how much? Kindly rectify the errors, some calculation errors has happened. I think trouble is in that Kelsey somewhere. We agree on that. Now, recognition of deferred taxes as income and expense will be routed through profit and loss account. Yes or no? Except the items relate to OCI or the items relate to equity or relates to business combination. Now look. Recognition of taxes as income and expense. When I am using the word taxes, I am talking about the tax expense. As income or expense will be routed through P&L only. Means current tax, profit and loss account debit to current tax. Deferred tax, profit and loss account debit to DTL. DTA account debit to P&L. So we always route it through profit and loss account. Current taxes as well as deferred taxes. Everything goes through profit and loss account. Except for that item on which that tax is levied is getting disclosed somewhere in OCI, other comprehensive income. I hope you remember now. Schedule 3, part 1, part 2 and so on. Of course, within that P&L only, within that only we have it, other comprehensive income. So when you find out your net profit in P&L, you will not create tax expense there, because the item on which the tax expense is getting recognized is not there in the P&L, it is there in OCI. So then that item of tax expense will also be recognized through OCI. If the item on which there is a tax is getting recognized through equity, you know, after share capital you have equity, is getting recognized through equity, then we will recognize deferred taxes and current taxes through equity only. And of course, in case of business combination, when you learn IND AS 103, I will be in a better position to explain that when you debit identifiable asset, the non-controlling interest, at that point of time, whatever is the tax impact on that, deferred taxes and all those things will get adjusted in that journal entry itself. Means it will not come in my P&L. Yeah, this is what it wants to talk about. Okay, you will always recognize the DTA, DTL, current tax through P&L except for 3 cases. Either it goes through OCI or equity, or if it is in a business combination, that entry of business combination only. Now, offsetting the items of tax. Current tax item. Offsetting means in balance sheet, when you are going to present current tax item. What is a current tax item in balance sheet? Provision for tax. And related item is nothing but advance tax or TDS. They are related item. So can they be offsetted? एक दूसरे के सामने knock off कर सकता है क्या? Can you offset those items? Yes. Standard says items of current tax. I can say items of current tax, that is nothing but provision for tax and advance tax or nothing but TDS, can be offsetted against each other. That is, asset set off against liability and vice versa. Only if A, the entity has legally enforceable right to do so, and B, the entity intends to set off on net basis with tax authorities. What I am talking here is, can I offset those items of provision for tax against advance tax? In my books I have provision for tax and I also have advance tax. Can I net both of them and write a single item? Means journal entry से offset नहीं करने का है. Advance tax 100 crore, provision for tax 89 crore. So can I write down net advance tax 11 crores? Yes, I can. Presentation only in balance sheet. Like in balance sheet, here I say provision for tax 89 crore, advance tax 100 crore. Can I say I can just write down presentation, net advance tax 11 crore. Don't pass an entry. I will not pass an entry. उड़ा डालो provision for tax account debit to advance tax. No entries. Presentation. Can I do this? Yes, you can. Provided, point number A, the entity has a legally enforceable right. I have a right to do so. Now when can I have a right? Provided both of them are pertaining to same assessment year. A provision for tax is pertaining to previous year. Advance tax is pertaining to this year. Can you offset? No, not allowed. Government can do. They have that power. I can't tell the government, last year I have paid extra tax, you have adjusted in this year ka tax. So can I say the entity has a legally enforceable right to do so? Current year it can knock off with current year. And the entity intends to set off on net basis. The entity wants to set off on net basis. Sorry. The entity has a right to do so and it intends to do on net basis. If given an opportunity, it says, yes sir, we intend to net it off against each other. Then you can present it in this manner. Like many a times, even though it is pertaining to current year, but it is under the purview of two different tax authorities. ये क्या? One tax is South Africa wala, other is India wala. Can you offset? No, not. Though it is pertaining to current year, I can't offset. So in India, I can offset only this two, which may be pertaining to same assessment year or you can say it's previous year. As far as deferred tax is concerned, Of course, it can be offsetted if the entity has legally enforceable right to set off the items of current tax. And second, the DTA and DTL relate to income tax levied by same taxation authority. Means I have a deferred tax asset and I have a deferred tax liability. Can I knock off this deferred tax asset and deferred tax liability? Yes. Means I can just show a net deferred tax asset or a net deferred tax liability when only if I have a legally enforceable right to not deferred taxes. Income tax में deferred tax जैसा कोई concept ही नहीं है उधर का. Only if I have a legally enforceable right to set off, to set off what? The current tax items. The current tax items, if I can set off the current tax item, can I say even deferred tax item can be set off? And दूसरा, those deferred tax item, asset and liability, if they are different, then only set off का बात आता है, have been created through which levied by the same taxation authority. Clear? Then only I can set it off. Okay. One more small area is left out. As far as DTA is concerned, you know, tax credit, unused tax credit. I can have two parts. Recognize as probability of future taxable profit existed, was not recognized as probability of future taxable profit did not exist. ऐसा हो सकता है? DT in respect of unused tax losses or unused tax credit. Recognizes probability of future taxable profit existed. बरोबर है? तो कोई प्रॉब्लम नहीं. हमने उस टाइम पे recognize किया था and still it is existing. So no need to reverse it off. But if I find out that probability of future taxable profit does not exist, then of course the DTA which has been created is to be reversed off. Yeah. So हमने आज लॉस किया. Now we say sir next year profit होएगा, बोलते yes sir होएगा. तो I would have created deferred tax asset. Profit किस में? Tax में. I would have created deferred tax asset. Subsequently I come upon a fact कि sir let's whether check it out whether that profit sufficiency is existing or not. I go for checking it or I say yes it is still existing. Continue. But if I say no sir, this profit sufficiency is not existing anymore. When you thought it was there but now there is no probability, then what to do? the deferred tax which have been created should be reversed off to that much extent. Dusra, what is the second area? Deferred tax asset was not recognized as probability of future taxable profit did not exist. Means आज हमने loss किया, but today I didn't create deferred tax asset. Why? Because this future taxable profit did not exist. Chances that I will make profit did not exist. I would have not recognized DTA. Then subsequently, I again check out the circumstances. Now subsequently when I check out the circumstances, I get an affirmative answer. Yes sir, the probability is existing that there will be future taxable profit. It is more probable now. Then what should I do? Create deferred tax asset. It is not existing now. I say okay, continue not recognizing and so on. Yeah, that is nothing but subsequently we have to just work out with respect to what we have done in the past. Clear? सब क्वेश्चन हो गया? 1, 2, 3 is done, 4 was done, 5 was homework, 6. I think this is very simple. The following details are available in the books of ABC Limited. Particulars and rupees is in lakhs. 1718, 200, 1819, 300, 1920, 250. Advance tax 1718, 175, 1819, 350, 1920, 270. ABC Limited estimates its deferred tax liability to be 100 lakhs and deferred tax asset to be 20 lakhs. How it is to be disclosed? Can I say this provision for 1718 can be knocked off against advance tax of 1718? So if here only if I make an balance sheet, I can have provision for tax 1718, 200 minus 175, can I say 25? If I look here, 300, 350, advance tax for 1819, 50. I hope you remember, legally enforceable right. Then 250 and 270, again advance tax for 1920, 20. Now can this total advance tax of 70 be knocked off against provision for tax? No, because I don't have legally enforceable right to do so. Deferred tax liability of 100, deferred tax asset of 20. So can I say I can just write down DTL of 80, net DTL. Net DTL of 80. How? Net DTL of 80. We have assumed that वो दो condition fulfill हो रहा है. कौन सा दो condition था? You have a legally enforceable right to knock off the current tax items. And second, this deferred tax have relate to an income tax which is levied by the same authority, same taxation authority. Clear? Yeah? We go for a small break. Yeah? We'll be back at oh, I'm sorry. What's the time? 3:54. 4:50 now.